Good afternoon, this is Bob Iacchino from Path Trading Partners along with my co-founder Mike Arnold. And this is a weekend Path Chat for July 9th covering the futures markets. I'm going to take this opportunity to do a little review of last week and then we'll throw a preview of this week. In the futures Path Chat, I normally do it in the FX Path Chat, but we are still waiting on a new data feed for FX, so that is on hold for now. So let's start off by talking about last week's overall market picture. We had a decent recovery on U.S. equities on Friday, but we ended up down in the S&P for the week, down in the NASDAQ for the week. Only the Dow was slightly up for the week. When you look at the indices now, year to date, we can even look at them globally. The S&P 500 up about 8.36% year to date as of the 7th. NASDAQ up about 14.3%. NASDAQ Composite up about 6.3%. Russell 2000 up about 4.33%. We look at some of the foreign indices. Russia is down 13.4% year to date. The FTSE, that's London's index, up 5.7%. Paris's CAC up 5.8%. Frankfurt's DAX up 7.9%. So equities still fairly strong across the globe. We move over into Hong Kong. We're looking at year-to-date up 15.2% for the Hang Seng. And the Nikkei 225 up about 4.26%. Australia is only up about 0.43%, so less than half of 1%. Shanghai up 3.68%. So that's about it for global equity markets. When you boil it down to the sector level in the U.S., the New York Stock Exchange energy sector down 13.59%. But you look at the XLF, which is the Spider Trust Financial Services ETF, it's just rallied for its second week in a row. Financial services recovering, which is what is holding the Dow Jones up. Let's take a look at how the week looked. The bond sell-off intensified. It's not gotten crazy yet, but when you look at the overall yields, you're definitely seeing globally movement in yields. The 10-year yields across the globe, U.S. 10-year yields at an 8-week high, Germany at an 18-month high, France's 10-year at a 7-week high, and Japan's 10-year, that'd be the JGB, the yield are at 5 months high. So the sell-off is continuing, and that had global equities slipping on the week. The bond yields are really the most important reason. Crude oil fell again. Ever since crude oil made an intermediate high on May 25th of $52, it's about 6-7 weeks ago, we have had 6 of the last 7 weeks down in crude oil. We had decent crude oil draws and decent gasoline draws, but it just wasn't enough. We are now at the high range of the 5-year average in terms of crude oil storage, but we're also well past the height of the summer driving season, so the market continues to put pressure on crude oil. In macro news, seems like global central bankers are ready to kind of pull away the accommodation that they've had going on generally since 2009. And these small shifts in tone from the central banks are what helps send the longer term yields higher. We still don't have a ton of inflation data coming through that's showing there's going to be a bounce back, except of course for the strong U.S. employment number. But the backdrop of the employment number that we got on Friday really had muted wage growth and muted hours worked and muted labor force participation. We're still at 62.8 in labor force participation, which is only up slightly, up 62 points from 62.7 last month. That's a rounding error given the size of the data, so that's not up much. And although we've hovered around this level for quite a while, since about September of 2012, prior to that, it was the late 70s that labor participation was this low. Year over year, we've got 2.5% wage gains in the U.S. That is not enough to drive inflation. The unemployment rate rose to 4.4. The headline expectation was 178,000. We got 222, so that was good. But again, until we get wage growth, which we did not see, 0.2 on the rise on wage growth and 0.1 on the hours worked, we're really not going to see pressure on inflation. We had the G20 meeting gathered in Germany for this week, and they're speaking amid growing tensions over North Korea's missile program. On Thursday, Russia blocked a UN Security Council resolution that would have further isolated North Korea. That most likely led to a little bit of extra tension in the first meeting between Vladimir Putin and Donald Trump. Syria was also a major topic, and they also talked about combining on a cybersecurity task force, which back here in the U.S., Congress didn't really like those comments. Italy rescued another bank. Banca Monte dei Paschi di Siena, the world's oldest bank, received a bailout from the Italian government. They got $5.8 billion in state aid. As a result, the bank is going to slash staff and close about 600 branches, but they are getting bailed out. Janet Yellen was in a London hospital over the weekend. She was released on Monday of last week. She was being treated for an infection. Seems to be okay, and so far there's been no disturbance announced to her schedule because she is supposed to do the semi-annual testimony before Congress this week on Wednesday and Thursday of this week, which I'll mention again in the section about the economic calendar for the week. So seems like she's okay. She is speaking before the House Financial Services Committee on Wednesday and the Senate Banking Committee on Thursday. Now, the Fed did release the semi-annual monetary policy report, and I've got some highlights in front of me. They pretty much stuck to script. So, for example, economic activity increased at a moderate pace over the first half of the year, and the job market continued to strengthen. Measured on a 12-month basis, inflation has softened some in the past few months, but on balance, current and prospective economic conditions call for further gradual removal of policy accommodation. There's a lot more than this, but I'm giving you some highlights. Commenting on the labor markets, other measures of labor utilization are also consistent with a relatively tight labor market. I don't know where they come to that conclusion. Again, given these are the levels we were at in the late 70s. However, despite the broad-based strength in measures of employment, wage growth has been only modest, possibly held down by the weak pace of productivity growth in recent years. There's comments on inflation in here that I highlighted. Consumer price inflation, as measured by the 12-month change in the price index for personal consumption expenditures, briefly reached the FOMC's 2% objective earlier this year, but more recently has softened. I mentioned how the jobs number didn't really add anything to that in terms of strengthening that softened number. Continuing on what they've said, the 12-month measure of inflation that excludes food and energy items, so-called core inflation, which historically has been a better indicator than the headline figure of where overall inflation will be in the future, was also 1.4% over the year ending in May. This reading was a bit lower than it had been 1 year earlier. So again, referencing how inflation has been kind of weak. Talking about economic growth, more recent data suggests growth stepped back up in the second quarter. Consumer spending was sluggish in the early part of the year, but appears to have rebounded nicely, supported by job gains, rising household wealth, and favorable consumer sentiment. That rising household wealth points to equity markets and the value of homes, certainly does not point to wages. Business investment has turned up this year after having been weak for much of 2016, and indicators of business sentiment have been strong. That part is definite. The numbers in the ISM figures and capital X figures and things like that, consumer surveys, have all been strengthening. Then on monetary policy. The stance of monetary policy remains accommodative, supporting some further strengthening in the labor market conditions and a sustained return to 2% inflation. That is the FOMC saying inflation will come back to where we want it to be. She also said, or rather I should say they also said, because this is FOMC's monetary policy report, at the June FOMC meeting, most participants projected that the appropriate level of federal funds rate would be below its longer run level through 2018. So they are currently not planning on anything more than potentially one rate hike. That's the translation for that. They also said that they plan to reduce the balance sheet as of now this year. So that's another part of it that was in there. She'll be testifying based on this report on Wednesday before Congress and on Thursday before the Senate Banking Committee. Let's get over to the economic calendar for this week. And I'm going to just go over some really big highlights. For example, right now we're waiting for the Bank of Japan's Kuroda to speak at the branch managers meeting. This is a quarterly meeting where Kuroda always makes commentary on the economy and monetary policy. That has not happened yet. We're waiting on that right now. Continuing on Sunday, 6:50 Central Time, we're getting Japanese machine orders expected at 7.6. It was 2.7 last. We're getting Japanese bank lending, including trust and bank lending ex trusts, looking at up 3.2% and up 3.3% on both of those. And then we're looking for China's consumer price index year over year and their producer price index year over year. Consumer price index expected to be up 1.6. Consumer price index expected to be up 5.5. Those numbers will matter and they will move the currency markets as well as the futures markets. Looking in toward Monday, some of the really important things: Chinese new yuan loans for June, looking to be 1.3 trillion in new loans. They were 1.11 trillion last. Again, that's a yuan number. Headed in toward 1 a.m., we're looking for German trade balance in euros, expected to be 18.7 billion. Then at 9, we've got U.S. labor market conditions index change. No estimate on that. Won't matter so much because we just had non-farm payrolls. Get into the evening, 8:30 p.m., Australia's NAB business confidence for June and Australian home loans for May. Home loans are expected to be up 1.5% versus down 1.9 last. Moving into Tuesday, again, all these times are Central Time. Japanese machine orders at 1 a.m. year over year, no estimate on that. Canadian housing starts at 7:15 a.m., looking for 201,500 in the housing starts. It was 194.7 last. Then you get to 7:30 at night, Australian Westpac consumer confidence for July. And then you get to 11:30 p.m., we've got Japan's tertiary industry index month over month, expected to be down 0.6% after being up 1.2% last. Wednesday, July 12th, we are going to get UK jobless claims change, UK average weekly earnings and weekly earnings ex bonus, the UK ILO unemployment rate, and the UK employment change. That is all at 3:30 a.m. Just a couple of estimates on that. Employment change expected to add 120,000 jobs versus 109 last, and the rate is supposed to be 4.6, and that will be unchanged. Average weekly earnings supposed to be up 1.8% versus up 2.1 last, and ex bonus up 1.9% versus up 1.7% last. 4 a.m. Eurozone industrial production year over year for May, expected to be up 3.5%. Then we get to 7:30 in the morning, and the U.S. Fed will release Janet Yellen's testimony to Congress. That will be the pre-prepared statement. So we'll get her pre-prepared statement, which she will read at 9 a.m. So at 9 a.m., she begins her testimony, which she'll read her prepared statements, which were released at 7:30, and then there'll be a Q&A, which will have a lot of just sort of mini speeches and posturing by members of Congress. They'll be very annoying, and occasionally they'll throw in an actual question that she'll answer. You've also got the Bank of Canada releasing their July monetary policy report. And then at 10:15, Bank of Canada's Stephen Poloz and Wilkins, I don't know Wilkins' first name, be holding a press conference in Ottawa. Not sure what that's about, but it's of high importance, so it will be something related to the economy. At 1 p.m., we've got the Federal Reserve's Beige Book release. Moving on to 6:50 p.m., we have Japanese buying of foreign bonds and foreign stock buying. That'll be released by the Bank of Japan. Then at exactly 8 o'clock, Australian consumer inflation expectations will be released. Moving into Thursday, just before midnight, Chinese trade balance expected to be 43 billion versus 40.81 billion last. That's in dollars. 1 a.m., German consumer price index year over year expected to be up 1.6%. That would be unchanged. Then 3:30 in the morning, Bank of England credit conditions and bank liability survey. That's essentially another version of a stress test. They'll be basically giving us the health of the banks in the UK. 7:30 a.m., Canadian new house price index year over year. And then you've got the usual initial jobless claims in the U.S. and continuing claims. Initial jobless claims expected 245, continuing claims 1.950 million. 9 a.m., Janet Yellen testifying before the Senate banking panel. That will be a lot of posturing by the members of the Senate. And then occasionally, hopefully, we get an actual question she can answer. That'll go on all day and be televised as well as the testimony before Congress will be. Then on Friday, we have a huge batch of numbers at 7:30 in the morning. We've got Consumer Price Index month over month for June, Consumer Price Index ex food and energy, Consumer Price Index year over year, and ex food and energy year over year. Let me just give those estimates. Month over month for June, supposed to be up 0.1 versus down 0.1 last. Ex-food and energy month over month, up 0.2 versus up 0.1 last. Consumer price index year over year, 1.7 versus 1.9 last. And the estimate for the ex-food and energy year over year, 1.7 versus 1.7 last. Remember, the FOMC commented on those core numbers in the monetary policy report that I talked about earlier in this recording. Then we've got U.S. real average weekly earnings and average hourly earnings. We'll see if that isn't consistent with the jobs number, where there's very little growth. Then we've got advanced retail sales for June, expected to be up 0.2 versus down 0.3 last. And then ex-autos, which is expected to be up 0.4 versus unchanged last. And then at 8:15, U.S. industrial production for June and manufacturing production for June, both expected to be up 0.3. Industrial production was unchanged last, and manufacturing was down 0.4. 9 a.m., University of Michigan consumer sentiment for July, expected to come in at 95 versus 95.1. And then the Baker Hughes rig counts again at noon. We had a nice rebound in Baker Hughes with a total rig count up 12 on this past Friday after being down 1 net and only up 1 oil rig last week. So that's it for the week. That is the review of last week, the preview of this week. Let me just turn it over to Mike so you guys can see what's going on in the chart. That's a VIX chart in front of you. You can see the VIX hasn't moved much either, although it tried to spike a couple of times in the last couple of weeks. And again, if there's anything else out of the G20, it will move the market. But so far, pretty much all's been quiet on that front. Mike, it's all yours.
Okay, thank you very much, Bob. So, VIX ending the week, 1119. Again, popped up this week over the highs around 15 and then dropped right back down. So whenever it seems to pop up, for the most part, people come in, no fear really, and buy it, and then drops back down. So let's see what the financial futures did to warrant that pop up and then to drop back down. Here, let me zoom in for us. Okay. Dow mini futures, this was a big drop that gave the pop up in the VIX, then we'll rally back, ending straight at a Gann level. So continued rally next week. We're going to have major resistance coming in right around this 21,437 area, anywhere in here. Then you can watch for the 21,450 area as the next major level. If we do get through that, 21,471, then we'll watch for a retest of the highs, 21,508. If we do pull back, we have a pretty big support zone from 21,271 to 21,249. So that's going to be a very key area. If we do get below that 21,249, either on a sustained basis intraday or a close, then we're going to be watching for a potential move all the way down to this 21,140. So keep that in mind. And then we'd watch for a retest of the rising 50-day moving average, 21,120. So that's what we'll be looking for in the Dow mini futures. Switching over to the S&P. Again, we will zoom in on it. S&P, nice big drop. Getting just below the 50-day exponential moving average and popping back up. Rally back on Friday, which was also an inside day to Thursday's day. If this does rally, this also rallied straight to another prior Gann level, this 24,75 area. So if we get through that on Monday, we're watching for 24.28. Then we'll be looking for a prior breakdown zone coming in about 24.31. Then once we get through that, we're looking at major resistance from this 24.36 to 24.38 area, also where we have a descending trend line coming in. If we drop back down, first key area is about 24.11. Then we'll be watching for this 24.09 area, which is very key. If we get below that, watch for a return to this breakout zone coming in about 2,402. Then if that's broken, we could see a drop to the 23.98 level. Switching over to the NASDAQ. NASDAQ futures. This has been the weakest of them all right now for the ones we follow. Sell off, rally back, sell off, rally back. So this is a very key area we're watching. Came up, testing to the underside, the 50-period exponential moving average and the declining rotation zone. So there's a lot of resistance in here. On a rally, major resistance coming in about this 56.77 area, and if we do get through that, the 56.98 to 5700 is going to be key. If we do get back above the rotation zone, you could see a pretty strong rally back eventually to the 57.65 area to the upside. If we head down, very strong support, 55.93 to about 55.91, very key support in there. If that is broken, we have some minor support about the 55.78, and then we'll watch for a retest of the defining point of this trend line, 55.58 area. If we do get a sustained intraday move below that, we're going to probably drop to the 55.33 area. Switching over to crude oil. Crude oil, big run up and a major retracement of that run up, pretty much about to the 50% level. So this is pretty key in our rising trend line. It did dip below it and then pretty much closing on it. So on a move back lower, starting next week, 43.77 to 43.69 is going to be first area of key support. Then we're going to be watching for about 43.39 as the next level. Then if we drop below that, next major area we'll be watching for is down around the 42.60. Rally back up, 45.10, first level of resistance we'll be looking for. If we do get through there, we'll be then watching for this 45.66 area, and on a really strong rally, we'll be watching for about the 46.03 as the first target area. Switching over to gold. Couldn't even recover to the declining rotation zone. Then a big move down. Almost getting to the next projected GAN level down this 1206 area. Just ending up just shy of it at this 1206.60. Closing nearly at the other projected level down, this 1211.50. So on a push lower, 1206 area is going to be very key, followed by we have a significant level at 1203.5, and if that is broken, we could see an extended move down to this 1198 to 1200 level. Rally back up, significant resistance now coming in about this 1216.50. If we do get above that, we could see 1219 area, which would kiss the trend line goodbye and the prior breakdown level. And on a stronger rally, we'll be watching for right around this 1225 area. Finally, over to silver, which we did have a flash crash in. You can see it triggering down. Now, a lot of these trades down here were voided, and I think they were agreed in some settlements in the $15 area or $15.35, something there. So this low tick might change. We can still do our projections lower if it does sell off again. Next levels down we'll be watching for is 15.50. Then we don't have much until you can see we're back in uncharted territory for the last year. Based off GAN projections, we're going to be watching about for 15.14. We'll be able to do some more projections once this chart is cleaned up a little next week. On a rally back up, 15.67, first level of resistance. Then we could see a return to about the 15.81. Then major resistance at this 15.85. So that's the key areas we'll be watching for to the upside. Any projections to the downside we'll really have to do on an intraday basis. We can take a quick look at a weekly just to see also. There's going to be some support possibly coming in right about this 15.23 area. That's about the next major level that we'll be watching for. It looks like it has some significance right in there. So that's based off a weekly potential target. But that's all we have for you for this weekend futures update. Turning it back over to you, Bob.
Thanks for that, Mike, and thanks to you guys for watching. Remember, there's a new Money Path podcast out, episode 79. Unbelievable. 79 episodes. Find it at pathtradingpartners.com or type in the Money Path podcast into the iTunes Store or Google Play. course, there's no charge for it. And hit like and subscribe if you like what we're doing. And we will talk to you guys in the next Path Chat. Cheers.